What's up, guys? I'm going to keep this video very simple, very short, pretty simple to understand, but as you can see right here on my screen, liquidity sweeps. I'm going to keep this very simple. If you don't know what liquidity sweeps are, go back to the basics, go back to my first video, kind of get an understanding of IRL, ERL, kind of the basics on liquidity like that, and then come back here. It's literally, I think, episode 2 or 1 or something. But let's just get right into it. What are liquidity sweeps? How do you identify them? I'll actually write this down right here. Let's do a little blueprint to this video. What are liquidity sweeps? Let's move that. What are liquidity sweeps? How do we identify them? And 3, how do we use liquidity sweeps? That's P. Okay. What are liquidity sweeps? Basic form of trading. Liquidity literally runs the markets. When you're in a trade, what are you doing? You're putting your stop loss where usually? Below a low or a high, below a low or above a high, because that's where liquidity was swept, right? If that's part of your trading plan, actually here, I can just show you an example. This was the GBP USD trade. Actually, I have a better one right here. I'm currently in this actually. This is something I alerted literally for free. If you don't take these trades, you're kind of, excuse my language, stupid. Whole thing was on the hourly right here. Okay, so liquidity sweep. Do you see how we have a high right here? Price pushes up, manipulates up, liquidates people out right there. That becomes a high that I would call a protected high, where I don't think price would return to. So where do I put my stop loss? Above the high. Same thing if you're entering on a, I can draw this out. Let's say price comes up, sweeps out a high, and starts breaking structure to the upside. So sweep right here, shift right there. I guess my point is let's delete this. My whole strategy kind of revolves around a liquidity sweep to start. And then that's how where did everything go? That was on the other one. Starts with liquidity sweep, and then I use my other confluences to pair in. So what are liquidity sweeps? Think of it this way. For you to go long, you want to see a zone in the markets where people got stopped out and a lot of volume gets pushed up. If we're looking for a long, a lot of volume gets pushed up in the opposite direction. So that's where you can take your position because you see smart money coming into the trade and a possible good setup forming. So in the case of a long, let's say a low gets formed right here. What you want to see price do is sweep out this low right here and indicate that you could go higher by a shift right here. But this displacement up is what also signifies a liquidity sweep. Obviously, you don't just want price to push up, come take that low, and then start doing something just a little, because what's going to happen is probably going to keep going lower. And if it just goes like this little movement up, just a little retracement just to go lower. So what you want a liquidity sweep to be identified as, let's say, like I just drew, you have a low that forms right here. You want price to, I'll actually draw this out so you guys can see fully. Let's go solid. You want price to sweep this low and show such a heavy push up that it's signifying volume is, or the markets are kind of shifting. You don't want, like I said, just that little push up. You want to see an influx pushing up to the upside in this case of a long right here, if that makes sense. A lot of the time, what liquidity sweeps look like beautiful ones, is you will see, I'll try and find one, like a wick, a very beautiful like wick, like price literally wicks down. It's a massive wick right here. This is the 4-hour very high time frame. What is this? Aha, I actually took this trade. This is one of the ones I alerted. That's actually crazy to see. Okay, look at this. Do you see how price, okay, let's say you are in a trade already. You're like, oh, price pushes up off this low, liquidity sweep right there. You don't get proper like structure shift and everything. Let's just say for whatever random reason you're entering right here, you're putting your stop loss below the low right there. I'm sure people tell you this all the time. If you lose a trade like this, you're literally liquidity. Like, I hate to say it, but look at that. Do you see how it literally knifes through that? Like, it's literally a knife going into like styrofoam, like satisfying. That is satisfying to see right here. It literally knifes through it. That is a liquidity sweep. Whenever you see price push towards a prominent high or a prominent low, this candle could slightly close below that, and then you get a massive, like I said, a massive influx in orders right there, a big push up. That's liquidity sweep. It's when buy limits, sell limits, or stops are taken out in the market, and you see a massive push up. Like I said, look at this. This is beautiful because it wicks through, and then you see a massive push up because you're seeing a bunch of orders coming into the market, indicating that this is flipping. Obviously, like I said, this is a bearish trend right here. As you see, higher low, lower low, higher low, lower low, and then right here, this low gets swept right here. Obviously, you had other confluence here. I think this was a daily order block right there. I remember this trade, but like I said, it's literally just branching off from what I said. Price pushes up with a heavy influx of orders right there. So that is what a liquidity sweep is. It's pretty simple to identify. So let's cross that off, give you guys a little structure here. How do we identify them? Like I said, liquidity sweeps are literally prominent zones in the market that you want to see a high or a low. There could be relative equal highs, relative equal lows, London high, London low, Asian high, Asian low, previous day high, previous day low. Those are all indicators of where liquidity could rest. Those are time-based liquidity, like I said. But this is where liquidity rests, and you can either use it as a target or you can use it as a stop loss, wait for an entry, everything. And like I said, if you don't know like internal range liquidity, go back to my, I think it was second video, go back there and learn, because what I'm teaching right here, like liquidity sweeps, is external range liquidity. You want to learn internal and external. Excuse me. But yeah, it's how do we identify them? It's the easiest way. Like, look right here. I'm just seeing this right here. You need to pair high time frame, narrative, and everything. Obviously, liquidity sweeps are just one narrative. But look, do you see how this high was hunted right here? Want to know why? Well, a decent way I like to identify them as is a big wick, usually left, signifies that liquidity is resting right here. So in this case right here, what is this indicating? I'm not saying you take a position off of this, but this is indicating that people have let's actually set that properly. People have a ton of stop losses right there. A lot of, in this case, early sellers. So that's what smart money kind of looks for. Early sellers, early buyers. And in the case over here that I showed you, everyone saw this. Oh, this is beautiful. But like, I'll move my screen so you can see. Why would you just enter like off of that right there? There's not really much telling you after. Yes, liquidity is taken right here, and that could be relative equal lows. But what happens after? Not much. It retraces into this 4 hour right here, this 4 hour fair value gap, and then hustle out, because that's 4 hour internal to external. But you don't have other confirmations to pair with it. So obviously you need to pair everything. You pair the time frame. And in this case, I remember this trade. This whole thing was a monthly order block. You need to pair, let's say you have a shift in structure, market structure shifts right here, and then boom, you have a fair value gap right there to enter off of. Like it's beautiful right there, that whole setup. But you don't wait for the sweep. Yes, this was a sweep, and yes, you got that right. But you didn't wait for the right sweep. So in this case, you would have been liquidity right here. So going back to what I was saying over here, easiest way to identify them is look for prominent points in the market. If you see like that, you're like, okay, yes, there's liquidity right here, right here, right here, right here that was taken out. But is it prominent enough with that high left there that I would take a short? No. Obviously, you wait for that short, that high to be taken. Boom, you have a nice sweep there of that massive wick right here. Yes, you have this high right here. You have this high right here, this high, this high, this high, this high. But are those prominent enough to where if you see it, you're like, you know what, I'm going to take that sweep? You also have to look at the higher time frame. Like I guarantee you there's a higher time frame imbalance below here that needs to get inverted first, or high, like I said, simply just a high needs to be taken. So that's very simple to understand. So I'm going to cross that off. How do we identify them? Just find prominent points in the market, find bigger wicks that could signify there's a lot of resting orders there, and most important of all, just be patient. It's that simple. So how do we use liquidity sweeps? What is this here? Okay. How do we use liquidity sweeps? There's so many ways to use liquidity sweeps. You either use them as a TP, where you want to exit a trade, or you use them as a stop loss, where you want to be protected if price does go against you. So I'll use this as an example again. How do we use liquidity? In this case, liquidity was swept here, so let me just set up. Let's say you take something off of whatever reason. You like this inverse right here, and you want to take an entry off the top of that. I don't care, stop loss or TP down there. And you want to take something like this. Let's just say that's what you're taking. Nice, decent trade. What are you doing? Right here, This is your high that you don't want return to. Obviously, trading's a game of probabilities. Anything can happen. But this high you don't want return to. So you're going to put your stop loss above this high right here. Because if price does invalidate and keep going higher, you're giving yourself a cushion, but you're also saving yourself from potentially being pushed up all the way here and losing a trade. Use stop losses, please. So how do you use liquidity here? In this case, where you want a TP, you have resting liquidity down there. Let's just say you have liquidity here, you have liquidity here. What do these all have in common? Now, let me move this. What do these all have in common? Big wick. I hate this tool. What else does it have in common here? Big wick. What does this have in common? Semi-big wick, semi-big wicks. You're not taking this candle as liquidity at that low, are you? No, because that's not really signifying much. Do you see these big wicks signify targets in zones of liquidity? If you were in a short here, you target this low here. You would target that low right there. And then even maybe that, but you're not targeting this low right here, this low right here, that low right there. Those are not points of liquidity. Maybe on the smaller time frame, yes, they are. But when you're looking for an entry like this and you're trying to pair your time frames properly, no, it's not. So going back to how do we use it? You use liquidity to either enter a trade or to exit a trade. In this case, you used liquidity right here to enter this trade in the form of internal range liquidity, which is your 4-hour fair value gap. You used it for step 2, stop loss at the high, so that's an order sitting there. But in your case, you're hoping this is a protected high and it is not going to get returned to. And then third, your TP. You are simply exiting your trade because of this big wick right here signifying liquidity. That wick right there tells me that there's a bunch of orders resting at this low. So what am I going to do? I'm going to target that and I get filled. My position exits at this low because there's orders sitting there. What does it signify? People are probably looking for something like this. I don't know. I don't trade like that, so I don't know where a stop loss will go. But people are waiting for a possible order to go long here. It's that simple. So where is this? Let's cross that off. It's very, very easy to understand. We've gone through what are liquidity sweeps, told you what that is. How do I identify them? Very simple. Think of it a knife going through styrofoam, the simplest way, but you need to be able to identify points of liquidity. The simplest way is go in your daily, mark out your previous day high, previous day low, go to your weekly, previous week high, previous week low. You can even mark equilibrium if you want to. I don't use that much of the range and everything. And then go London high, London low, Asian high, Asian low. And then if you're trading like New York PM, mark out New York AM highs, AM lows, lunch highs, lunch lows. But those are just time-based liquidity where a lot of liquidity rests. And if you see something like, I hate that so. If you see something like these wicks, let's say this is New York low right here, New York AM low, excuse me. You're using this right here as a drawn liquidity, or if you want long, you're waiting for that to get swept to go higher. So to summarize everything, liquidity you use as a point, you wait for a sweep, like a liquidity sweep to go long or short. You use it as a TP to exit a trade and profit, or you use it as a cushion to protect yourself in the form of a stop loss when you're exiting a trade that if it goes up here, you're auto exiting so you don't like lose all your money, literally. I know a lot of people that don't trade with stop losses and that's how they lose money, but that's not the point of this video. That's for another video, maybe mentality video. I'll yell at you. But that is everything. Everything we've gone through right here in about 14 minutes. A lot of this is me yapping, but please, please, please base your trade idea with at least a liquidity sweep as your first confluence. Because like I say in my reels all the time, like if you don't see liquidity, you will be liquidity. Like I'll go back. If you see that high right there and you're like, let's say, oh, it swept this high. I don't see the proper liquidity here. I'm blind, even though this high with this massive wick is sitting there. And that's 9 a.m. That might even be our news. That might be a news high right there. So a data high. So you're looking at that too. And you're like, means nothing. Let me just throw myself in a random trade right here. And just put TP like there. You're getting stopped out. And you're going to see this. And then it goes all the way to TP after. And you're going to be fumigating. Like, you're going to be all pissed off. What does this signify? This signifies that The market moved because of you. Your order sat there. Price moves from liquidity zones to other liquidity zones, which is highs and lows, internal, external, so it can keep moving. Like price, like I've gone in videos before. Price does this. Price does not do this. It must retrace, and in order to retrace, it's going down in an uptrend to collect more liquidity to go higher. Price needs momentum. Think of it like a meme coin. Like I hate to use this as an example, but price doesn't move up unless it has more volume. So think of it this way. Liquidity is quote unquote volume in a market. This is how the market moves. And draw liquidity will be another video, obviously, but price will move to a certain point as a very strong magnet when you see a lot of liquidity sitting there. So in this case, let's say this low right here is a very strong magnet. Why does price move to that? Because let's look on our daily. It's a daily low right here. After this was, I think, monthly external range liquidity, price was most likely going to move to this low. What do you see here too? It's a pretty big wick, in my opinion. This low is a pretty big wick as well. But the point is, be patient. Wait for a sweep. Pair your other confluence. I don't care what you use. I don't care if you use a fair value gap, inverse fair value gap, CISD, market structure shift, breakage structure. I don't care what you use, but please use the liquidity sweep as your first one, as your first confluence, so you can at least just have that peace of mind that, okay, if this is a protected high or low after a sweep, we're most likely not going to return to it. So I will leave you guys with that. Watch this video 1 time, 2 times, 3 times, whatever you need to understand this. If you need help, shoot me a DM on Instagram, on Discord. You guys have everything. But I will leave you guys with this. Take care. Wait for your liquidity. Be patient. Don't be liquidity. See you guys.